Boom, boom. We got a laugh track coming in on this one, Matt, because the audio.
What you got going on over there?
I don't know. We need somebody new in the production house. Please, somebody help. Call up. Do you want to hear radio again? HFR, Mistrade, Market Vitals, the stream. Please, right now, retweet that we are live, not Memorex. Talking markets, talking. I love weekend update meets halftime report, Matt. Good morning to you. It's still morning here in Booger Glob, yeah? We've lost Matt.
Booger Glob.
It's an old joke, Matt. Matt, I wanted to bring this back.
It is the morning and the sun is up. It's a good day.
It is a good day. I want to bring this up. We talked about this yesterday, how Jennifer Newsom had posted this and then retracted it.
Yeah.
Funny how certain folks can't handle the truth when someone cancels something. Anyway, Governor Newsom, the California governor, definitely California, has been MIA now for 12 or 13 days.
Along with Jen Psaki. Along with Jen. And then somebody shared, Thomas, Groy person. I'm not sure is that a name? I don't know what lineage that could be. Anyway, he shared this. I don't know if this is true. Listen, on Market Vitals, everything is guaranteed probably. Well,
Gavin Newsom lookalike casting call. Why would they need that? I don't know, Matt. It's an upside down world. And I want to get this trending if I could, Matt. And that is Epps didn't kill himself. Let's just get that trending now. Before he does. Where is Roy Epps anyways?
I saw an interview with his daughter over the weekend. That was interesting.
Seriously, Roy Epps' daughter.
Yes, so supposedly. Who knows?
Guaranteed probably.
She said they grew up LDS in Salt Lake, and his dad was definitely in the Army for 4 years only. So went to the rank of sergeant, she said. He was an abusive guy, controlling, wanted, what she wore, who she saw, who she talked to, blah, blah, blah.
So he was a dad.
He was a dad. He cared about her. Was really all I heard, but I don't know, dude. That's crazy.
All right, man, we got to talk just for a second. All right, condolences. Bears, hold on. I mean, the shining light in the Bear game was Roquan Smith. Man, did he play great. The defense
the shining light was, I can't believe I watched the whole game and they were actually in it and had a chance.
Right?
Because
it's coaching,
the Norris division now is being led by an anti-vaxxer, apparently. The Norris division.
Oh, we're going to get to that. We are going to get to that. Did I even bring it in? I don't think I did. Hold on a second.
But yeah, the Bears, Justin Fields showing glimmers of a couple nice passes last night. Their defense was weird. They were great sometimes and they were horrible others. So I don't know what to make of that team. What a schizo team.
Oh, I know where it is. I know. Matt, I saw a tweet and it was about how, and we talked about this yesterday, or I tweeted it about yesterday or the day before, New York now allowing professional sports gambling in-app. All the majors have jumped on board. And the reason why I wanted to bring it up is because it's a race to the bottom, folks, sports gambling. Matt, I love how Matt's involved in it. And he's involved in it because it's fun to do. The problem is a lot of people spend way too much money and gamble way too much of their net worth when it's nearly impossible. And my point was, we were arguing yesterday on what the money line was in the Buffalo Jacksonville game. And he was talking about how we got to modify the bet, NFL teams 10 plus favorites, you got to go with them and then hedge with the money line bet. And he was like, that had to be 1,000, payout per 100. I'm like, no way. So we looked it up. It was actually 865. So you bet 100, you got 865 for Jacksonville. The key here and the important part of it is if you bet Buffalo, you had to lay 1,400. So a $600 middle, how can anybody win long term with that kind of odds stacked in the bookie's favor? It's,
But again, people don't understand that. They don't understand that the odds right there every time, even if you're right, even if you were right and you took the 800, you should have been getting about 1,200.
Exactly. And you were right that it had to be somewhere around 1,000. Well, if it was a tight market.
Listen, that's the way but I've always thought about that. I think about how the book makes their number, right? Because I know it's not about who they think is going to win. They're just trying to get the money laid. So I try to think like a market maker, AKA a bookie, when I bet. Like, why did the line, like, I think about, before I even look at lines in the beginning of the week, I set my own lines where they should be. That's what you should do. And that's how you should trade too. Like, and that's why market profile is such a great tool, because if you're in balance, you can bet that it's going to go up or down, but it's going to move one way out of balance. If you're out of balance, it should move back to balance. And if you start thinking that way as a trader and as an operator within this game, and it is just a game. And coming back to your point about betting and the commoditization, it's no different than pot. There's a bazillion, anybody, and I'm not saying anybody, pot's somewhat difficult to grow.
No, it is not. It's a weed. They call it weed for a reason.
I understand. But
to get to commercial grade quality. Yes.
Correct.
It is
correct.
difficult.
I'm not talking for your personal consumption, but to mass produce and do it well, and it's risky. Whereas on the side of the book, I mean, these guys they're basically setting the rules. And if you want to play within their rules, then the rules are always going to be stacked against you, right? So anyways, Matt, let's talk PPI, but just one thing before we go. A shout out to Summit High School girls cross country. Yeah, the girls here at Summit High School, 13 years in a row, have won the state and a couple times national championships in cross country running, which is, I mean, you're talking about, again, every year, new kids coming in, and every year. And I think it is because, as we talked, watching the Bears, if they had a reasonable coach, they would have won that game 3 or 4 times. So it does come down to coaching, and this hats off to the Summit Girls High School, because it's an epic place to train. And really, it's not only a coach at the top end, but it's also coaching from the lower end. And
right,
in our community, we have very good people that aren't involved with the high school team, yet they are coaching kids and teaching the enjoyment and the benefits of running at a young age. My kids used to be part of this Cork, which was Central Oregon Running Club. And, none of my kids were on that level but they had a blast. They had a blast meeting at Drake Park and going to run for an hour and a half, 2 hours every day. And they did the sprints and the uphill, downhill, the training and the whole thing. They made it fun. And ultimately that's what breeds success, is having fun and learning from great teachers. And I think that does take a community, whether it's football, basketball, baseball, right? It's all gotta be kind of bred from within, and the positivity has to come from the community that you feel from, being a part of that community. It's being a part of the community that makes it so fun, I think, for the kids.
Well, you mentioned that, and I immediately thought, first of all, coaching back to last night, the Steelers, 3 coaches in 56 years. I mean, just a great coach. They thought he was great. They stuck with him. It's unbelievable. 3 coaches in 56 years. And on the cross country side, it reminded me of legendary York High School cross country coach Joe Newton. Coached there from 1956 to 2016, Matt, and won 28 Illinois State cross country titles. Nearly half the time he won the state title. His teams won the state title. Now, why? Are there just better cross country runners in Elmhurst? No, I think talent stratifies pretty, evenly around municipalities. So it's got to be the coaching and the community, the feeder program for sure. But back to the Bears, holy shit. They for sure have talent, but that's about all you can say. All right, man, let's talk some price discovery. Out today, PPI 8.6% tied for highest ever. And with everything, you cannot get a true answer out of anything from the government because apparently they claim beef and veal prices are off 10%. We know this is full of shit because we actually enjoy beef protein and buy it regularly. And so let's just call it what it is, a record PPI, and bonds rally a point. We have a disconnected world, Matt. Maybe we start with the bonds because they went right to a level.
It's a good one to start. It's a great one to start with PPI being through the roof, which is again cost, which is inflation, right? Let's just call it what it is. And you can see here on the chart, the bonds, we have been talking about this 164, and here it is. This was that line. That's why I said we're going to go to 164 if we get over that 161 on a close. Well, we closed over it finally on Friday and swiftly have moved to 164, which is this level right here. Now, as an outside potential, you can possibly go test those highs that we saw in the last 6 months, which is right up here at 167. Again, this is getting a little stretched to me. And if you're a fundamental person, you're going, inflation's through the roof and interest rates are going down. Like, again, upside down world. But this is, again, where trading is difficult. And if you're a fundamental person and you're just new to this, you literally have to look at the charts always first, forget about what the fundamentals you think are or perceive as, because it doesn't matter. This is the reality to us today, which is bonds are telling us as they rise that interest rates are going lower, which does not help the situation that we are living in. So at some point, something is wrong here. And we've talked about this. The equities have run crazy. I mean, the S&P is up, the NASDAQ's up 15, the S&P is up 10%, Russell's up 15, 20 in the last, 6 weeks through the roof. And bonds have gone from 157 to 164, which is a huge move. And basically a move that it had beginning in late September 22nd, we were at 157. Bottom fell out. 165-ish. And we went all the way down to 167, tested it. Now we're back to testing this. So if you miss this run, now is not the time to jump on board on the long side here. It's just not the right time. The fundamentals do matter at some point. The market right now is out of any type of coherent thinking. And we talked about it yesterday. That's why I'm staying away from the bonds, even though I said it was going to go to 164. I was not long. I just watched it. Happen.
And that's fine, man. That's part of trading, is like deciding where you want to put your energy. Yep. Man, I wanted to bring up also, and it's something that we haven't covered here, but being a long time trader on the floor of the CME, and I spent some time in the Eurodollar contract. Eurodollar is the Chicago Mercantile Exchange. Before they bought the Chicago Board of Trade. The Board of Trade had the 5-year, 2-year, 5-year, 10-year, 30-year, the long end of the curve. The CME has the Eurodollar contract, which is your hedge against short-term interest rate moves pegged by the Fed. And a lot of people trade the curve. Some of the best traders I've ever known in my life were huge curve traders on that, let's just call it out to the 5-year on Eurodollar contract deliveries. Anyway, PPI through the roof, and there has been some rumbling that maybe the Fed has to act earlier than they've said in all of their statements from these Fed meetings. So I want you to bring up the DEES of 2022 Eurodollar contract. And right now they're pricing in that Fed rate to be 75 basis points. If it's trading 99.25, that would be 75 basis points next December. But anyway, this is a great way to play short-term interest rates, i.e. inflation, because if the Fed wants to battle inflation, one of their primary tools is raising rates. The short end of the curve is much more important in their toolbox until they can taper till forever comes home. But anyway, I just wanted to bring it up because we haven't brought it up. So let's look at DEES 2022 Eurodollars.
You're looking at it here, and again, it's bearish. It broke kind of the same time that the bonds broke in late September, which is right up here, Bob. So that was back in balance at 99.55 or so. Now we're down at 99 and a quarter. Like you said, we triggered off the 99 low, 99.06. And, again, it's this is a bearish chart. I would say this is leading to higher interest rates at some point still.
Yeah. And when I look at it, I'd love to see a rally back into that first little blip there where your cursor is actually on. That was at 37.
Yeah, 99.37 ish. Yeah,
right on.
I like even better the bottom, like this hole in here that needs to be filled in, 99.45 or so. Personally, without a position on today, that's kind of the area I would look for. I would like to get a little bit more of a swing on, because the high actually was up here and the low was down here. 50% gets you that 99.34. 61.8 is also 99.40, which gets right into that gap. So I kind of like that when you just look at time and Fibonacci levels. That comes into play, and that it fits very nicely with the profile also. So I would look for that area, 99.40s to 99.50 would be a good area.
Right, and it's a giant amount of money being played in its contract. Very, very liquid. Again, just like the bonds, the big boys.
What are the hedge funds use this for? Give us an idea why they're using this as a vehicle.
Well, because it's the only vehicle to trade that short end of the curve. Like you go out to the board of trade, the 2 years, the first one listed. So you have all that exposure on interest rates that needs to be hedged. And believe me, at the Merck at its height, that Eurodollar complex was entire width of the floor from the front month all the way to the way backs. I can't even imagine how many people were in that quadrant and in those pits. I spent about a year in the way backs. The most amazing sea of people ever in open outcry. Just an incredible giant traders, Eurodollar options, some of the biggest traders on the planet in that Eurodollar complex. And we haven't talked about it. And we haven't talked about it because rates have been zero for seemingly ever.
Right.
And as we move out of a zero interest rate environment, trading these outrights and trading the spreads, which gives you the curve, it's just a giant spread or a giant trade that's been going on for decades and has been very quiet as we have been in a zero interest rate environment.
Yeah.
All right, Matt.
Although interest rates are negative in a lot of places in Europe, it's not a normal thing, right? So to your point, at some level, this has to rectify itself, and it has to come back to a more centrist viewpoint. And it's been easy to be on this trade because, as we've talked about, actually the last couple of weeks, this is all the Fed has been doing. But at some point, they're going to have to pull the rug out from under everybody, and that will happen, I do believe. Right on. Or what else we want to talk about? As a great segue into the price of beef being 10% lower, which is bullshit. Right. But our argument, liverwurst or Braunschweiger, for me, are you kidding? The worst food choices available on the planet, Matt. I gag at just thinking about it. The smell. My brother would just squeeze it out like it was a fucking snow cone and eat it out of the fridge. One of the grossest things I've ever had to be witness to, and it happened a lot. And I got PTSD. I get it. Like, I have no interest in liver and onions and stomach lining, the stuff that like I saw cooked in the kitchen by my dad when my mom wasn't around. I'm like, what is going on? But this stuff, my mom actually introduced me to this. So she came from, more of the upper middle class. My dad was lower middle class. So, I don't know where but this stuff was amazing. They must have served it.
You're talking Braunschweiger.
I'm talking Braunschweiger, and it tastes amazing. And here's my simple creation. This was me coming home after school and peanut butter was gone and I'm hungry. I would put 2 or 3 slices just like that on the white bread with heavy, heavy mayo, 1 or 2 slices of white onion and 1 or 2 slices of red tomato, like a perfect tomato from your garden in the summer. And then you top it off with, if you were lucky and you still had some Thousand Island dressing, or just add the ketchup, and it was Thousand Island dressing.
For sure.
And some
Thousand Island in my household.
And some relish. Oh, I'm telling you, you got to try it, because It's the everything. It's the cold. It's the snap of the fresh veggies. It's the mayonnaise. It's the ketchup. It's the relish. Everything, Bob. It's killer.
I'm gonna puke. Let me share, because the reason why we bring it up, because we're investigative journalists here at Market Vitals, and we want to know what is going on in Bavaria. Maybe it is the liverwurst or the Braunschweiger, because exploding cases. Well, everybody's vaxxed there. 85% of the plus 60 vaxxed. Yet cases are through the roof. And then let's not forget this: the German newspaper. I'm not sure what paper it was.
Right there, the
Berliner Zeitung. I mean, German just sounds angry, doesn't it? Of course they. Anyway, Matt, here's the list of players, and it takes up almost the whole page of play. And the first one's my favorite: the game abandoned due to cardiac arrest of the referee in. Sorry for laughing. Lauber SV. The Donautsworth district is right next to Braunschweiger.
I also like the rest of it. Just the conversion here is obviously from German to English. And so they're using reanimation instead of, resuscitated. So I like the reanimated piece of it too. This is really getting kind of fun. We're reanimating the transhumanistic people that are taking the shot. Interesting.
Well, and it goes to our talk yesterday of the gamer in Korea that dropped dead at 20, and no mention of the cause of death. Please, people, start asking questions. I have a few.
There's a reason, and again, there's a reason why from day one we've said this: comorbidity does not pin the death on COVID. It does not. For me, it never has. Just like the Italian, and I'm Italian, so us Italians, we are skeptical as the boot of Europe. And, just like the Italian health authorities came out last week and said, no, we're not saying there's 130,000 deaths. Rather, there was only 3,000 that actually died of COVID symptoms. Everybody else was comorbid, which just means you had a lot of shit going on in your fat diabetic body that, really couldn't maintain a cold that hit your body. I mean, that's all it is.
All right, Matt, what else we got? We wanted to talk Tesla.
We wanted to talk Tesla just because, all this, the hype was out there. Like if you weren't, first of all, the earnings came out 2 weeks ago. This thing was due for arrest.
Bring it up.
Elon's trying to talk it down with talking about, paying capital gains on stuff he's never sold, which is more of a slap in the face of the government than anything. And again, this thing traded 1250 into last week, and it was still, they were just squeezing every day as much as they could out of the shorts. I'm going to go on here, just like my friend Tim Knight said today. We will not, I don't think we'll ever see these prices again for Tesla. I don't think we'll ever see 1250 again. And it comes down to valuation at some point. At a 1.2 trillion, now 2 trillion is gone, but we've lopped off 20% of that already. That 1.2 trillion market cap can never be, unless they start making, things beyond the cars, which they haven't yet. That's part of this company, right? SpaceX, boring company, all his AI, Starlink shit. None of that has anything to do with Tesla. None of it. So you can't lump all that into Tesla to justify paying these types of prices. I think that we've put in a top. We're trading them, 1040 right now, 1040 EZ for all you, filers out there. And I just don't, we will, and there's another gap in this thing. If you look at like a daily chart, you got a gap up here now at 1208, and you got a gap down here. The gap on the lower end is somewhere like, I want to say like 700.
Isn't there one there at the 900s too?
900s maybe. Yeah, there's one here. Correct. There's one here. So it's the battle of the gaps. And there's one here also, Bob. There's one here at 670. So these are the ones that I think you got to be worried about now. And there's one here. So the gaps are what's going to catch you. And I don't think we're ever going to see this gap filled up here. I just don't think we're ever going to see it because the valuations don't make sense. We've trapped enough people now over the last week or two that'll be enough to hold. And you can see it right here. Here's the gap down. I'm saying that we're never going to trade 1223 again, let alone 1240. I just don't.
Right. I mean, it's a perfect.
I think it's over. I'm not a short to zero guy either, but I'm just saying
Right.
That was a powerful break there. And this trap was set on the new high that failed. Okay. So you had 2 days where it jumped up here again on further squeezes. And now you're going to need some type of great earnings again, which we can't have for the next 3 quarters. And this thing, there's nothing in the company that justifies this wealth. And even Elon knows that. That's why he's laughing at it. That's why he's tweeting about it. That's why he's putting, polls out there, because it's ridiculous. He knows it's ridiculous.
And who knows how much he's already sold.
Well, we can know in the future, but we don't know today.
All right, Matt, as we go, I want to bring up.
Well, speaking of psilocybin, which we like to hear a lot before you move on.
Please tell me about psilocybin. I heard and I saw in a headline that psilocybin actually works more furiously with your psyche if you also have THC in your system too. Like I couldn't draw that reference logically.
Let's take a look at this. We were talking.
Oh my shit!
So I don't know. I still think it's earnings that came out today. So I don't know what the earnings are. They're not showing on my trading view charts because I'm already out of it. I was not involved. But the earnings spiked this thing to test this morning, pre-market, by the way. That was pre-market. I'll show you that here. Pre-market, they spiked it up to $58. And even that, by the way, Bob, traded 58 here. And you can see that 58 and a quarter, that was pre-market. That was 4:00 a.m. here on the West Coast, right when they started trading the stock. And they crammed it right down their throats, back to 31. We were selling this, remember, 38, 39 and laughing at ourselves at 42, 43, and it came into earnings close to 50. So laughing all the way, right? If you did not exit on the earnings announcement into it before, or seriously, right before it happened, by the time it opened regular market hours, it was already down 20%. So yeah, you could have got a higher price for sure, but you were one of the few and lucky if you did. And that was the reason again for this thing to sell off. And we were talking about it. Stocks like this are dangerous. And when you get a big move like we had, again, 28, we picked it up, $10, 40% move or so. And it blew off here. And guess where it is? It's back in value. Now you can buy it again. If you like the story, now you can start looking at the big levels again. It's back to value. It is back to value, Bob.
That is a mushroom trip right there. That is a mushroom trip. All right, man, let me share and let's play the game. What if this chart was a 10-minute? All right. We're looking at a chart here. What if this was a 10-minute? Man, does that look topped?
You're getting short for sure.
You're getting short for sure. All right, this is back to the DEES 22 Eurodollar contract. And this is a quarterly, a 3-month chart. I love playing these brain games. Obviously, and you see when it moves, like when shit hits the fan and they move big, right? How many times have we seen a right side? And so hold your breath, Matt. The lows that we've been in since, a 3% interest rate, short-term rate. Remember those days? I mean, it wasn't that long ago.
Well, I mean, I was telling you a story like when I was a kid and I had a paper route, back then my dad, all we did is we put my money into a money market fund. Think about that. Does anybody even put money in a money market fund anymore? But back then, money market funds were earning you, I mean, I was anywhere from 12 to 18% over those years in the late 70s, early 80s. I mean, that's how crazy inflation rates were with Paul Volcker in charge, the last real Fed head that did what he was supposed to do. Ever since then, they've just been, an outside entity, that is not a government entity that controls whatever the frick they want. It's made up.
They have a tri mandate. It's not a dual mandate. They have a tri mandate, and the third one's the most important, and that is guarantee rate of return for their cronies. Anyway, you look at that chart, that 3-month chart. If PPIs keep going the way they're going, they're going to have to act, and they're going to have to act way earlier than they've said. And the potential in the chart, I mean, again, we talk about this. It's not even out of the realm of possible. 2% just gets you back to the lower momentum level on that quarterly, 2% rates. I'm not saying that happens this week, next week, first quarter, but I'm telling you that that's available on the chart. And if the story on prices keeps on its trajectory, they're going to have to move. And they actually said that that they'll be directed by the future gauges of inflation.
Well, here's a lesson in markets. Like, you have to place these bets well before the masses are understanding that this is happening. Now's the time to place the bet. Like, if you want to place that bet a few years out that interest rates are going to be higher, there's a multitude of ways. And it's a great bet that really, if you're a long-term investor, but we're only talking 1 to 3 years, probably is going to play out very well for you. Probably is going to play, and the risk is super minimal on top of it.
Yeah, I mean, the rates go back to zero.
The skew on the trade like that, a skew on a trade like this is totally wind at your back, and nobody's thinking about doing it because it's been so easy for the last 27, 30 years of fading interest rates, right? Everything's been lower, 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 lower. Well, we're at the bottom. We're at the trough. Now is the time. Now is the time. If you believe in it, no matter what happens in the world, whether the U.S. is still the standing, fiat, or China or Bitcoin, interest rates have to go higher. They just have to.
All right, Matt. Let's reconvene tomorrow.
Let's talk a little bit about my favorite subject, Michigan football.
All right, we're going to leave with Michigan football and.
Well, the Big
in
Ten
real
refs,
time,
the Big Ten refs at the meeting yesterday, now 8 days later, came out and said, we made 2 big mistakes in the Michigan State game. 2 of them. And guess what? That was a 14-point swing, and we lost by 3. So give me one of them. Give me one of them. I'll take the win. I mean, this is not. All I have to say is this is not Pac-12 officiating. We know how bad the Pac-12 is. The Big Ten, I used to really respect, but now I'm like, okay, everybody really hates Michigan that much that we're going to keep them out of the fray and allow Ohio State and their power in the Big Ten to continue today. Just remember, it all switches back. It all comes back to the winningest program in history.
The Chicago Bears. All right. Thank you, Matt. Please share and retweet the broadcast. Please join us at marketvitals.io. Please feel free to reach out for any symbol you would like us to discuss, and we will try to fit it in our packed schedule. Matt, you have a great day.